Welcome to the Deep Dive. We're here to cut through the noise and bring you the insights that matter.
That's right.
And today, we're doing a really fascinating financial deep dive. We're looking at City Union Bank.
Mm-hmm. An institution with, what, over 100 years of history?
Exactly.
Yeah.
Over a century. And we've got the goods, the official board meeting outcome, their investor presentation, a press release, all covering their Q1 FY26 results. That's the quarter ended June 30, 2025.
So quite current data.
Very current. And our mission today is really to unpack all of this, pull out the key nuggets, understand what these numbers really mean for one of India's oldest private sector banks.
And importantly, what it means for you, our listener, trying to make sense of this financial world.
Precisely. It kind of begs the question, can a bank with such deep roots, truly redefine what a modern financial powerhouse looks like?
That really is a core question, isn't it? It's more than just the numbers themselves. It's about how an established player like CUB keeps thriving, keeps innovating. So we'll look at their financial health, their strategy, their consistency. It's quite a story.
Okay, let's dive in then, starting with the big picture. How did City Union Bank actually do overall in this first quarter of FY26?
Well, the headline numbers are genuinely pretty compelling. Their net profit after tax, it jumped 16%, reached INR 306 crore this quarter. That's up from 264 crore last year.
306 crore. And I read somewhere that's actually a first for them.
It is. It's the very first time in the bank's entire history, all 121 years, that their quarterly profit crossed the 300 crore mark.
Wow. Okay, that's a significant milestone.
It really is. It could signal, a new scale of operations for them. And if you look at their total business, that's deposits plus advances, basically the money they handle.
The in and the out.
Exactly. That grew by a very strong 18% year on year, pushed them from just over 1 lakh crore to nearly 1.2 lakh crore. INR 1,019,754 crore to be precise.
Okay, 18% total business growth is definitely impressive. But let's break that down a bit. How did the deposits and the loans, the advances, contribute individually?
Good question. So deposits showed really robust growth. They were up 20% year on year. Reached INR 65,734 crore.
20% on deposits? That's quite strong in this environment.
It is. And their advances, the loans they've issued, they grew 16% year on year, standing at INR 54,020 crore.
So solid double-digit growth on both sides of the balance sheet.
Absolutely. And that's really fundamental for a bank's health and momentum.
Right. So that consistent growth, deposits, and lending leading to that record profit, it clearly shows momentum.
Yeah.
But it raises that key question, doesn't it? What's actually driving this profitability beyond just more business volume? Where's the profit really coming from?
Yeah, let's get into the engine room. One key thing is their net interest income, the NII. That's their core income from lending, minus what they pay on deposits.
The bread and butter.
Pretty much. That grew by a solid 15% to INR 625 crore. But here's what's quite striking. Their non-interest income. That's fees, commissions, trading profits, things like that.
Okay.
That's an even more impressive jump, up 27% to INR 244 crore.
27%. That's quite a leap for non-interest income. Was there something specific behind that surge?
Absolutely. The single biggest driver, and this is quite something, was their treasury profit.
Treasury, you mean like managing their investment?
Exactly. That profit soared by an incredible 274%. It went from just INR 17 crore in Q1 last year to INR 64 crore this quarter.
Wow, 274%. That's huge. So they made some smart moves with their investments.
It certainly looks that way. Smart asset allocation, maybe capitalizing on market conditions or interest rate movements. And this really boosted their overall profit.
While keeping their core lending margins stable. What about the NIM, the net interest margin?
That's the key point. Their IN held steady at 3.54%, right in line with last year and their own guidance. So they're not sacrificing core profitability for this treasury gain.
Okay, so it's not just the core lending doing the work. They're being quite savvy with investments too. And what about costs? Did they manage to keep those in check while growing?
They did pretty well there, too. Their operating profit was up 21% to INR 451 crore. And critically, their cost-to-income ratio, basically how much it costs them to earn each rupee.
Efficiency, right.
Right, that actually improved. It went down to 48.1% from 49.34% last year. That signals they're getting more efficient as they grow.
So better efficiency on top of growing income streams.
Exactly. If you connect the dots, you see this balance. Solid core income, a big boost from opportunistic non-interest income like treasury, and improving efficiency. It shows strategic flexibility and operational discipline.
It sounds like a bank that's growing smarter, not just bigger.
I think that's a fair way to put it.
Okay, making money and being efficient is great, but a bank's real strength, its foundation, is managing risk, right?
Hmm.
So let's talk asset quality. What's the story with their NPAs, their non-performing assets?
This is actually one of the most impressive parts of their story lately. It really highlights, I think, robust risk management.
How so?
Well, their gross NPA, that's the percentage of total loans that have gone bad.
Right.
That decreased significantly. It's down to 2.99% from 3.88% a year ago. That's an 89 basis point drop.
Almost a full percentage point improvement. That's substantial. And net NPA after provisions.
Even better, relatively speaking, net NPA dropped to 1.20%. That's down from 1.87% last year.
And I recall reading something about the trend here. It wasn't just a one-off improvement.
No, not at all. And this is key. Both gross and net NPAs have shown a sequential decrease for the last 8 quarters straight.
8 quarters, 2 full years of consistent improvement.
Exactly. That points to something systemic. Effective credit evaluation up front and proactive recovery strategies when things do go wrong.
So they're setting aside money for potential losses too. What about provisions?
They are. They made provisions of INR 145 crore this quarter, and their provision coverage ratio, the PCR, that buffer against bad loans.
Yeah.
It stood strong. It was 79% if you include technical write-offs, which banks sometimes do for accounting. Even if you exclude those, it's 61%. That's a healthy safety net.
Okay, that makes sense. And I noticed a big chunk of their loan book is actually in gold loans.
Yes, that's a significant piece. It grew by 31% year on year, reaching about 15,000 crore rupees. That makes up around 28% of their total loans.
And how risky are those considered? They mentioned the LTV, the loan-to-value ratio.
Right. The average LTV is around 61%, meaning they're only lending about 61% of the gold's actual market value.
That sounds pretty conservative.
It is. It's a very prudent approach. Gold is obviously strong collateral, easy to value, easy to liquidate if needed.
So the losses must be low.
Extremely low.
Yeah.
The NPA ratio specifically for their gold loan portfolio is just 0.05%, almost negligible.
0.05%. Okay.
So this focus on secured lending like gold, plus actively managing down their restructured accounts, which are now just over 1% of their total loans, it all feeds into that improving asset quality picture.
And underpinning all of this, how's their capital position, the CRR capital adequacy ratio?
Very robust. Their TRR under Basel III rules is 23.0%, and the core Tier 1 capital is 22.09%.
How does that compare to what's required?
It's well above the regulatory minimums. It basically means the bank has a very strong capital base to absorb any potential shocks and support future growth. Loads of cushion.
Okay, so strong financials, improving asset quality, solid capital. Let's shift gears slightly. What does this all mean for their actual business strategy? Who are they focused on serving? And crucially, how are they adapting to this, rapidly changing banking world?
Well, what's fascinating here, I think, is seeing how this very old bank, the oldest private sector bank, is tackling digital transformation head on.
While sticking to their core.
Exactly. They haven't abandoned their roots. Their primary focus is still lending to MSMEs, micro, small, and medium enterprises. That's about 40% of their lending.
And why MSMEs?
Well, they mention this segment consistently delivers higher yields for them. Plus, their approach seems well suited. They talk about a granular asset profile, smaller loan amounts, lower ticket sizes, and importantly, often backed by solid collateral like residential property, plus personal guarantees. This naturally helps keep those NPAs low, as we discussed.
Right, that makes sense. Focus on a niche they understand well and manage risk carefully. But you mentioned digital transformation. They're not just relying on the old ways.
Not at all. It seems they clearly understand that technology is absolutely crucial for future growth and efficiency, even with their traditional strengths.
So what are they actually doing on the digital front?
Quite a lot, actually. They've rolled out things like the National Common Mobility Card, that's for transit and retail payments. They have WhatsApp banking, pay-to-contact features, even UPI ATMs.
UPI ATMs? Interesting.
Yeah. And behind the scenes, they're investing in data analytics, AI, using conversational bots, pushing digital lending platforms.
So customer-facing tech and back-end improvements.
Right. And even co-branded credit cards. They've partnered with popular cricket teams like Chennai Super Kings and Sunrisers Hyderabad for CUB, CSK, and SRH cards, plus things like credit line on UPI.
That's a pretty broad range of initiatives. It doesn't sound like they're just dipping their toes in.
No, it feels strategic. They're using API banking, correspondent banking partnerships, really leveraging technology for everything from getting new customers onboarded smoothly to handling payments efficiently.
And it seems like they're getting noticed for it, too. I saw mentions of awards.
They are. They recently got ranked second among private sector banks for digital payments performance in the 2024-25 awards. And they've picked up other awards for cybersecurity and data management.
So it's this blend then, respecting the legacy, focusing on core strengths like MSME, but aggressively adopting tech for the future.
That's exactly how it looks, being both traditional and quite cutting edge simultaneously.
Okay, beyond the latest quarterly numbers and the tech push,
No.
what about the fundamentals? The things that define City Union Bank over the long haul? That legacy is pretty remarkable.
It really is something. Founded October 31st, 1904, makes them the oldest private sector bank in India, headquartered down in Kumbakonam, Tamil Nadu.
And the track record. That's
Yeah.
the bit that blows my mind.
Continuous profitability and dividend payouts across all 121 years of operation.
Every single year for 121 years.
Right.
Profit and dividend.
It's almost unbelievable in banking, or frankly, any industry. It speaks volumes about their stability and consistency.
Absolutely. And how widespread is their network today? Are they just a Southern bank?
They have a pan-India presence now, 876 branches in total. But yes, their stronghold is definitely still in the South, 733 branches there, and over 551 actually, just in Tamil Nadu alone.
So deep roots still evident in their physical presence. Plus ATMs, I assume.
Oh yes, nearly 1,800 ATMs, 1,776 to be exact, so decent access for customers.
And who's steering the ship? That kind of long-term consistency must reflect stable leadership and governance, right?
You'd think so, and the information suggests that's the case. They talk about robust corporate governance, a board with a majority of independent directors.
That's good practice.
And here's another striking statistic. Only 7 CEOs in the entire 121 years.
7 CEOs in 121 years. That's incredible continuity.
It really is. It suggests deep institutional knowledge. And the current board isn't just long-serving bankers. It includes people with diverse expertise, like a retired RBI executive director, an IIT director, bringing different perspectives.
That sounds like a powerful mix, deep banking experience plus external expertise and oversight. And finally, what about their shareholders? Who owns the bank?
It's quite diversified. They have over 210,000 shareholders. And interestingly, they note there's still headroom available for foreign portfolio investors, FPIs, to invest more if they choose.
So potential for more international interest down the line.
Let's be.
Okay, so wrapping this up, it seems like a fascinating picture. A bank over a century old, delivering strong, consistent financial results. Record profits this quarter, improving asset quality over 2 years straight, solid capital.
Right, combined with that clear strategic focus on MSME lending where they have expertise.
And yet they're aggressively embracing digital innovation, winning awards for it.
It's quite the combination.
So for you, the listener, this deep dive into City Union Bank, I think it highlights a really crucial lesson. In a financial world, often obsessed with the newest fintech, or the next disruption.
Yeah, the shiny new object.
Exactly. It's not always just them driving innovation or resilient growth. Sometimes, maybe the most compelling stories, the most enduring success, comes from these established institutions. The ones that master that tricky art of blending deep-rooted tradition with cutting-edge tech and, importantly, prudent risk management.
A blend that's clearly working for CUB right now.
It seems so. So here's a final thought to chew on.
Yeah.
How might the success of a bank like City Union Bank thriving after 121 years by adapting this way actually redefine our understanding of what a truly modern and resilient financial institution looks like in today's world? Something to think about.